we try to move the decisions down to the lowest level possible. And people forget that failure is part of the process. To be efficient for me and to help the organization be more efficient on a whole, they need to be making decisions for me. And so they need to have the confidence that I will support them whichever way things go. And that's how you start to get an efficient organization.
Welcome to the Lubo Smid podcast. I'm your host, Lubo, co-founder and CEO of STRV. Here to talk to the industry leaders from the tech and startup space and ask them about their tips and tricks they use to operate at the top of their game. Today, I'm happy to welcome Rob Sechrist, my good friend and the co-founding president of Pelorus Capital Group, the first private cannabis-focused real estate lender. Rob has more than 20 years of experience from real estate finance and has managed more than 5,000 transactions worth over $1 billion. He talks about what it's like to be operating in one of the riskiest industries out there and how he copes with stress. Also, we talked about our common passion of heliskiing and racing fast cars. Let's dive into the discussion. Rob, thank you so much for joining me on the show. And it was great that you made it to the studio, that we can do it in person. And you had a personal preference that you would like to start with a little story of how we have met. So I will leave it up to you to kind of introduce. I'm a little worried where it's going to go, but it's all yours. So you can steer whatever the direction you want to kick it off.
So we met through one of a mutual friend and one of my best friends, Shaheen. And we met doing a heliboarding trip to Valdez, Alaska. And, Shaheen and I have ridden with each other for decades, and we kind of know what our limits are. He knows you, and heliboarding is you can pick whatever level that you want to ride. You can ride at extreme, or you can ride at very comfortable. But you're there, so you want to push to the extremist that you can feel comfortable at. And so, we had you join with us, and it was amazing. And it was actually my first time riding that entire season, that trip. So the very first time I was putting on my board, we were jumping off the tops of those mountains. So I was at a deficiency as well. But I didn't tell Shaheen until afterwards that, yeah, buddy, I haven't been up this season yet. And we're just jumping right into this. But what I always tell people about doing any extreme thing, whether it's a physical thing or a mental thing, you need to break that down into smaller pieces, because when you start thinking about the event that you're going to be doing, and when a helicopter is taking you up a 4,000 foot straight up cliff, and there is less than a half of a foot to put your foot down, and it's hovering there to let you out, to drop you off on this, I wouldn't even call it a ledge. I would call it, some place that you could barely hang on to in some circumstances. That it's easy to let your mind get away from you, and you need to start breaking down those decision things into smaller and smaller bite-sized pieces. And I remember looking at being in the tents, getting ready and putting on our harnesses and our safety gear and our beacons and all the things that we need, our Tomahawk airbags, and seeing the mountains and where the helicopters drop us. And that was my first time that I realized, oh my gosh, I might have even bitten off more than I could chew on this. And but in life, you need to break those situations down in more and more bite-sized pieces. And then it becomes, once you've gone through it, it becomes less of an emotional challenge, and then now more of a physical challenge. And so, in that trip, I always tell my wife that, we have a certain path or way that we enter the helicopter and exit the helicopter. And that's usually the sequence that we go down a hill. And there was one where I was struggling to get my board on, and you went ahead of me. And that's the one where you went over the edge and it broke off for an avalanche. And Luckily, it was you and not me because you were on skis and you have two edges and you were able to make it to the edge, where if I was on my board, I might not have made it. So I think that that everything happens for a reason, and we're here. It wasn't a big avalanche, but it was definitely something scary.
It was not small, and I'm like, as you are talking about it, I'm getting goosebumps because, like, it was first time for me heliskiing, and I had no prior experience whatsoever. Right? We received the briefing the day before, so was I aware about like all the things that could happen and how to act upon them? Yes. Did I have a strong experience with what to do? No, I was doing it for the first time. And the fact that I saw the avalanche break and I did immediately the right thing, right? I aimed out of it and I saw it in front of me. So it was not really catching up, and I was going into the side. It was an instinct, but I can totally imagine that, I could have done a different thing. It could break behind me, so I would not see it. And it was a little bit of a coincidence that it ended up the way it ended up. And yes, it was not the greatest avalanche out there, but still, it was scary.
We were right there ready to get you. Even if it was a bad situation, we would have been on you in 2 seconds. But it is.
I felt it. But like, I still have the video of it when I'm like, I got out and I'm breathing extremely, extremely heavy.
So
we have made it out. I love heliskiing and heliboarding. I haven't been back to Alaska since then, but definitely at some point it's happening again. It's the best skiing that you can get. It's unbeatable. Fresh tracks all day.
I would say one other thing: when you go through an experience like that with somebody, and this was Lubo and my first time meeting, we feel bonded. You feel very connected, and because you're basically putting your life in somebody else's hands, because it goes both ways. We're all there to protect each other with our lives in that scenario.
Yeah. So that was the great entrance to our little relationship, but we are here to talk about something else today. You have a great career history with doing a lot in real estate and especially now in the cannabis space as well. So we'll talk all about that because you have had some pretty big achievements recently that I would definitely like to dive in. But what I would like to get into, like we know each other on the personal side pretty well, but I haven't heard a lot from you about the business side of things and how you started with doing stuff in real estate and how it ended up that you saw the immense trend of what was happening in the world of cannabis and how that piqued your interest.
Sure, happy to talk about that. So my background is in real estate lending. My best friend and business partner have been doing real estate lending for decades, and we formed our company Pelorus back in 2010. But we had both been doing real estate transactions for decades before that. And Pelorus is a asset manager that focuses on private credit. And today we solely focus on private credit secured by real estate of cannabis use properties. And so today we've originated more than $500 million in the cannabis real estate lending sector. And we've done billions of traditional real estate prior to that. And we were the first dedicated lender in 2016 to lending to cannabis, commercial properties with cannabis use tenants. In 2016, we were the first dedicated one in the country. And then we became the first to launch a dedicated fund for that, which is the Pelorus Fund. We launched that for $100 million back in 2018. And then we converted that to a private mortgage REIT for the tax benefits, and we upsized to $250 million. And then we were the first to get investment grade rated, and we closed on an institutional quality bond offering, and that led us to upsizing our offering again to $1 billion. And today we're the largest privately held private mortgage REIT for cannabis use properties for both bridge and fully stabilized lending in the country. We've done about 73 transactions for over $500 million, and we've had 39 payoffs for over $100 million. And we just simply utilized our expertise in lending and looked at this sector much like we would any other specialty use real estate lending, such as cold storage, data centers, lab space. And we applied the knowledge that we have to those sectors to this sector, and we ended up becoming the leading expert in this just by default. There was nobody there, but now we're half a decade ahead of everybody else. And a lot of people ask us, well, how did you end up here? And that's because our local congressman, Dana Rohrabacher, who I don't think it's a secret, he doesn't mind smoking weed himself. He was our local congressman, and he passed the most consequential legislation to ever pass in the United States to date. And most retail or most people in the country don't know about this amendment, and it was called the Rohrabacher-Blumenauer Amendment, and it defunded the Department of Justice from any prosecution of a cannabis-related business. Excuse me. Why that's important is that while we're only lending to the owners of the commercial real estate, we didn't want to have a situation where the federal government was prosecuting our borrower's tenant and thus impacting the value of that property. If we couldn't replace that cannabis use tenant with another cannabis use tenant because of fear of federal prosecution, that could be problematic and could affect our valuation of our property. So once that amendment passed, which was in 2014, we realized that this is the largest newly created asset class in the country. And today, we know that that asset class for just the real estate alone, once all 50 states are legalized, is about $50 billion.
You mentioned a lot of expert terms. Let's break it down a little bit,
Sure.
so a normal person can also understand that. You mentioned insane numbers, and it's very impressive that you are able to operate with such a huge magnitude of like investments and loans and everything. But like, what was the trigger that pretty much identified, okay, this is the connection between what's happening in the cannabis world? What was the pointer that you saw, okay, this is what we should really focus on, going from the just purely real estate world?
Well, it is still, okay, so it was that legislation that passed, which my partner, he's like, buddy, we got to go this direction. And I'm the one that raises the money, and he does the underwriting. Is kind of how we have it primarily structured. And I'm like, but this is going to be impossible to raise money for. I know our investor base. I don't know if we're going to be able to do it. He's like, we're going to do it. We got to do it. And so that passing of that law was the genesis. And we like to think of ourselves as market leaders. Prior to being in cannabis, the great financial crisis of 2008, 2009, we had created the first loan product for borrowers to basically borrow with no cash down. So typically, whenever you buy a house, you got to put a certain amount of cash down, and to get things started if it's a construction loan or if it is a non-owner occupied, you have to put even more down. Well, we realized that there was all these assets across the country that need to be repositioned, and you had a lot of families and small businesses that had their contractor's license and were very experienced at building homes, but had lost everything. And so we created the first product for those people that had that experience but didn't have the net worth, the credit, or the liquidity to qualify for any loans. And so we're experts at creating new financial loan structures and products. And so we teamed up with a hedge fund, and we got the hedge fund to put up the equity for the borrowers for a portion of the profit split. And we actually were able to reduce our lending risk we traditionally would lend up to 60 to 65% loan to the value of the property. We reduced that to 50%, and the hedge fund brought in the rest of the equity. They prepaid 6 months prepaid interest reserve. So we had a very solid structure of a loan, but to the borrower, they just had a profit split, and it allowed them to mobilize their crews, start paying their families again, their families were able to eat again. And, this is just kind of how we think about things is we like to be the first to do things. And so we're the first to enter the cannabis space. And we've been the first of many in this sector with several of the things I just mentioned. And we have another one that we'll be announcing this week I'm on a press embargo at the moment, but it's another major win for us in the industry as well.
Speaking from the fundraising experience, how does one go and raises $500 million in an economic environment that is not nice?
Yeah, so it's first of all, this was an investor type that didn't exist. You have your traditional commercial real estate fund investors, and you have your traditional cannabis equity investors. There's two different sides of the end of the spectrum, but traditional real estate investors, we had about 250 of those, and each with on average about $1 million of capacity that we could work with, and we could raise millions of dollars through that existing network on transactions for $2.5 million in 30 minutes, no problem. But when
I like that pace.
Yeah, but that took decades to build that in a reputation of doing solid deals and building that up to that point. But when we pivoted to cannabis, that 250 investors was 10%, but only 10% after years. And so we only had like maybe 5 or 10 that were willing to do anything. And we had very limited capacity. And initially, I had thought that I would be able to educate them and make them understand the difference. And what I was realizing is they were so entrenched in their ways, and they were telling us how to underwrite the cannabis real estate deals, but yet they'd never done one. We hadn't done one either, but we knew better than they did because we had researched it and they hadn't. And so they were telling us how they wanted it to be done, which that's their prerogative. But we realized if we go with going by them and we don't go by the way that we think is the right way for the future, it's going to catch up to us. So we kind of just moved along, and eventually we only got 25 of those 250, but that was after years. And I had to go and start a whole new database of investors. And every which way I tried wasn't working. We tried to take cheat sheets and hire people to raise the capital, and none of those worked. And ultimately, we realized that it was going to have to be us, basically me and my team. And so ultimately, I had to think of new ways to create that asset class and think of ways to make it make sense to those investors and to create that dynamic. And one of the things that we did was we created what we call a fractionalized lead investor. And so a lead investor, when you launch a fund or an investment, a lead investor sometimes will get, because that initial commitment is going to bring in additional investors, that commitment, that lead investor might get some shared economics that are better than the rest of the people, because the rest of the people didn't have the same risk. They didn't put the money up first. And so what we did is, instead of trying to find, we did try to find one big one, but it wasn't working. So by default, we had to fractionalize that lead investor, and that ended up becoming a strategy that not only worked for us, but it worked to such an extent that it went orders of magnitude bigger than what we thought it was going to be. And today, when I speak at conferences and I help people to understand different paths to raising capital, it's something that I mention to people, is that if you can fractionalize that lead investor, in that sense, you're reducing the minimum amount that you need from each of those investors. And you might be able to raise that capital a lot quicker than you would be to find one big investor. And that's one of the main tactics that we use.
And is it like the returns that can be happening in the space, that they are a lot more appealing? And once you explain it to the investors, that they are like they are ready to put their money down?
So depends on what your fund is and what you do, but some fractionalized or some lead investors might get something for, enhanced yields in some way. For our fund, we had a situation where we gave some of the management fee back as a rebate.
And this is like a very complex topic for me to grasp from all sides. So, like on the fundraising front, when it comes to like fractionalized lead investor, is that something that you feel is applicable in different kinds of investments as well?
It's applicable in any way that you raise capital. So you're always going to need to raise capital. It always is going to be easier if you have a lead investor. And if you can fractionalize that lead investor, you can accelerate that capacity to raise that get to that first lead investor. So then the rest of the investors will fall behind. Just be careful. I always tell people, make sure that your fund works with just the lead investor, because it may be so you might do so well with that strategy that you never go and do the regular what you would call, investors are called LPs in a fund, limited partners.
Yep.
And you may say, hey, this is a great strategy, we're just good with that. So just make sure that when you do your financial modeling, and I'll just explain to you, because some people may not understand how funds are structured in some of the vernacular. So most funds have an asset management fee and a preferred interest split, and then a carried interest split. And I'll explain what each of those are. So the asset management fee for our fund is 1.5%. So for every dollar that comes in, we take the first 1.5% to run the fund and manage everything. The next 8% is paid strictly to the fund members. But everything over those two, the 8 plus the 1.5, so everything over 9.5% is split 80-20. 80% going to the investor and 20% to us. We've netted above 12% every single year, and some years as high as 15% to our investors after all fees for more than 5 years. Our yield to lifetime to date is 14%. And so some of the places that you might work on, depending on how your fund is structured and what you're willing to do, you could give that lead investor a rebate back of that 1.5% asset management fee. You might give them an 1/8% or 1/4% or something. Some equity funds, different structure than what we are, might give a portion of that carried interest split, the 20% that we would be collecting. We're not structured that way, but those are some of the things that you can do to improve the economics to that one lead investment group.
How does the current economic environment play towards or against the performance of your fund? Because it's been a rough year. To be honest, at least from my perspective, and it seems like you are taking no breaks.
Yeah.
It's just going.
Yeah. So I would say on the macro side that the activity is down about 75%. That's in capital raising in general. And I think that that's just indicative of the overall lack of confidence in where the economy is going, the macro issues in banking, and just the uncertainty of how things are going to shake out here in this next election and some things like that. For our specific lane that we're in for cannabis use lending, we're actually in a situation in a sector that has tailwinds. So we're actually still able to originate. We actually still have things that are going on that are positive, and we're one of the few sectors that have that. So we're able to navigate this and COVID, and we should theoretically be able to navigate any economic downturn or real estate down cycle better than other assets, because cannabis is essentially starts off with a $25 to $75 discretionary purchase that's going to most likely happen regardless if there's a war going on or even if you've lost your job. People are still going to spend money on cigarettes, alcohol, tobacco, and weed. They may not spend the same as they did previously, but that $30 billion of revenue is the size of the cannabis market annually, which will be $45 billion in the next couple of years, which is larger than the NFL or NLB combined. The National Basketball League and the NFL, it's a large sector, so that revenue is going to flow through regardless, and that's what our borrowers are capturing, part of that revenue. So we've got that's why a lot of people are pivoting to our space. So we had the largest growth we've ever had in raising capital during COVID because people started to freak out that they were too heavily weighted in real estate, passive income, and that the sector was questioning where rents were going to come from. Now we're seeing that same cycle in commercial properties for commercial tenants and being that virtual work environment. And so we're pretty isolated from that.
Is that some kind of high risk, high reward kind of situation, or do you actually feel that you mitigate the risk, but the reward stays still pretty high?
Yeah, the reward is disproportionately high relative to the risk. This asset class, the borrowers are not having to sell the property to exit the loan. So there's no, it's not like a traditional fix and flip loan, fund loan where they're buying a house, improving it and selling it, because if you get caught in a down market, you end up foreclosing on all those houses. We're not doing income multifamily or commercial tenant properties with traditional businesses, which could be impacted by the greater economy. We're solely focused on cannabis. So we believe that that's de-risked it significantly. But more importantly, we have bank quality borrowers and sponsors of our transactions, and we have 40% protective equity on our bridge loans that the borrower puts up, 25% on our fully stabilized that the borrower puts up. That's enormous equity protection, where traditional lending, that might only be 25 and 10% respectively. And so we're significantly more protected in that way. Plus we have corporate and personal guarantees.
What does the competitive landscape look like? Because it seems to be, you mentioned that you started early. You were among the first ones to be doing something like that. But usually when, others see that there's a success, they jump at it. And do you see a lot of competition popping and trying to replicate what you have created? Or is there a big barrier to entry?
There's a big barrier to entry, but they don't know it. And that's through experience and understanding the markets. We're tracking over 100 lenders in the private sector that have entered, and there's been as many as 400 banks that have entered the sector. So there's been about $4 billion of credit issued in the sector, and again, it's about a $50 billion asset class.
How do banks feel about deploying their funds with the cannabis industry? Because I can just, speak from the experience with crypto and Web3, and a lot of big organizations are scared of that, right? And for the crypto companies and Web3 companies, it's really difficult to navigate that. And is it the same with cannabis, or is it any better?
They're completely different asset classes. So I'll just speak about how banks think about cannabis, because I'm not familiar with how they think about crypto. So in cannabis, there are 684 banks, or roughly 15% of all the banks in the country. Of the 4,500 banks are cannabis friendly for depositor relations. This is the number one misnomer or misinformation out there, is that there's no banking. And it's simply untrue. It's actually down from the previous year of 702 banks. So it's actually going down because there was too many. The reason that banks, and you hear about so much issues in banks, is that for Cannabis has two types of banking depositor relationships. You have tier one, which is plant touching and can be cash that comes in. And anytime in the United States when you have $10,000 or more of cash, you have to do what's called a suspicious activity report. A SARS was the vernacular that's used. Well, during the Obama administration, there was a memo put out called the Cole Memo, and it established the banking rules, even though it's still federally illegal. And part of those rules were they established a SARS, Suspicious Activity Report, for cannabis depositors. It's actually called an MSARS for marijuana. So any bank in the country, all 4,500, could board cannabis deposits, tier one, if they wanted to. The problem is every single state has a different compliance rules that are necessary, and you have to understand the compliance that's necessary to board those deposits. Otherwise, you're at risk of losing your banking license. So even if you brought in millions and millions of dollars of deposits, if you got that compliance wrong, you lose your banking license for billions and billions of dollars. It's just not worth the risk. So the banks aren't willing to take that risk unless they built out their own compliance department for that individual state or the states that they're going to board clients in. And so those 684 actually have built out a compliance department to board cannabis depositors. And so they have that, and they will charge fees or have different thresholds of minimum deposits in order for those banks to board those clients. And so the reason that you hear about all the cash buildup out there has nothing to do with the banks. It actually has to do with federal credit cards are processed on the federal system. And so there's no credit cards that can be processed, or even ATM cards, legally at the dispensaries. And so what happens is you have a buildup of cash at the initial sale. And so all that cash now has to be moved downstream through. They're either making a deposit directly into the bank themselves, or they're paying their service providers with cash as well, and it's just moving downstream. That's the reason.
That's the reason why you can't pay for weed with a credit card?
That's right. Yeah.
Interesting.
Yeah.
Not that I would be buying weed on the daily, but it always looked a little suspicious to me that they were handling so much cash.
Yeah, that's why.
Do you think that they're it's gonna change at some point? What's blocking it?
Yeah, so there's a bill going through Congress and the House and the Senate right now called Safe Banking that's trying to address many of the issues. The credit card processing part, I don't know if that's going to be resolved in this first bill, but I met with Senator Steve Daines for lunch 3 weeks ago, and he told me that he has the votes for the Senate. And the Senate's the tougher one to get through. You need 60 votes to get through the filibuster. And the House has passed it numerous times already. So it looks like we have a chance to pass it. But the credit card issue, that may or may not be resolved in this first legislation. The first one will allow any bank to board those cannabis deposits regardless, and not have to go through the onerous procedures that were additional scrutiny above and beyond other banking depositor clients. Also to be able to custody shares on Schwab, Fidelity, and hopefully uplist onto the major exchanges like the New York Stock Exchange and NASDAQ.
And as there is a lot of these rules and regulations, is your activity limited to some of the states only, or
we only lend in states where cannabis has become legal. So we wouldn't lend in a state that's not legal yet.
So, and where is your activity the highest when you just
California is
the
largest legal market in the world. So there's 40 million people in this particular state, and our largest concentration is California, plus it's our backyard. But we do lend across the country. We've lent in at least 8 states. I'm pretty sure we're in 8 right now.
Is there any appetite going outside of the U.S., or what's kind of your thinking about where to take it next?
We have the skill set. We've underwritten transactions for international, but it's not worth our time to just do a one-off transaction. So if we were going to do it, we would launch a fund to do it. And there's so much to do here domestically at this time, that we're just 100% focusing on the domestic fund and activity that we have going on and not diluting ourselves. But there will be a market for that in the future. We've been asked to underwrite transactions, but ironically, there's a couple of interesting dynamics that are happening in the international market, especially the European Union, where they are initially, the first approvals have allowed the import of cannabis into the country. And if you just think about it, it is enormously expensive to produce cannabis domestically. When I say domestically, within country, the European Union, you have extremely high CapEx cost to build. You have the regulations, the labor cost, the union cost, the electricity costs are off the chart. All of these costs, the amount of time that they get off per year. And so, and plus these facilities are so expensive to build. They're tens and tens of millions of dollars to build a cultivation facility. So if your first strategy was to allow cannabis to be legal in your country, whatever way you're going to do it, and you allow it to be imported, you just blew up your entire domestic market, because there's less regulation, less taxes, less overhead, less CapEx costs in other countries, and they can just import it. So the out of country importing, the market that's being imported is going to always be able to beat your domestic market. So we really struggled with trying to understand how that strategy, if you think it through, is going to work out long term for their own market. And it's just the way that politicians think. They just don't really know how it's going now. I've heard counter arguments to, well, the people want to buy, domestic stuff, and they're only going to buy. Well, that's probably true, but of the universe of all the buyers, some people are going to want to buy stuff for less. And so
and there's probably more of those, right?
There might be, but regardless, you probably want to support your domestic market first. We just couldn't get comfortable making a loan in Europe.
What are some of the things that drive you where you'd like to take it next? Where do you source for motivation?
So we don't want to go public. That's something that we've passed on previously. We don't want to sell. That's something we've already passed on as well. We're really having a great time doing what we do. I'm able to have a lot of fun. It's an awesome industry. I'm able to do things with my friend Lubo here and do some other passions. I drive on the racetrack as well. And it's just a great business that we're enjoying. We see this fund getting to $1 billion, and we think that that's about the right sizing for where we want to be. And we'll just take it from there. This is an open-ended fund. It'll continue on for decades and decades. I more think about it as not in setting a number, but we're the leader in cannabis lending. That's our goal. We want to be the gold, the BlackRock of lending, we want to be the most sought after lender in the sector, but with no negative connotations.
Got it. How do you actually work on making this a legacy? If you would like this to be around for decades, right? How do you build the team around it? How do you structure things so it's not just, you have been doing it for a while now,
Yeah.
but how do you set it up for long-term, vision-wise, mission-wise, and so on?
So first, all of your people have to match your principles. If they don't match your principles, I don't care how smart they are. I don't care how good they are. I don't care about anything else on their resume or any other matters, because it doesn't matter. If they're outside of what the core of the organization is, you've got an issue. So that's number one. Number two is that you want to hire people that think of themselves as an owner. And so the best way to make them think of themselves as an owner, because they act differently than they do as an employee, the best way to do that is vest them with the company. So we vest all of our people, and we pay our people as well as we possibly can. It takes so much bandwidth for us to retrain somebody and to bring somebody in that's an off-balance sheet cost that you wouldn't see, and that takes enormous amount. It slows the efficiency of the operation down. Plus, we got to put somebody in and train them in, and that takes time and effort and go through the whole process and figure out if they're a right fit as well. And you can't always read somebody's mind if their principles are the same as yours, but we try to get good at that. But if you can get them thinking as an owner, vest them with the company, pay them well, compensate them as proportionally as you possibly can for the organization, because the more that people are outperforming at their own individual basis, the more that the organization is going to do better as a whole. And what we try to do is we try to move the decisions down to the lowest level possible, or where those decisions might be being made in real time. And we try to give all of our people the ability to make those decisions for themselves. And it basically, as long as that you don't make the mistake twice, I'm going to back you up. And as long as you can justify to me in a legitimate way of why you made that decision that didn't go the right way, that's okay. It's part of the process. And people forget that failure is part of the process, failure and time. And so we want people making the decisions, and I want them to not be doing stuff just to stay in the comfort zone. To be efficient for me and to help the organization be more efficient on a whole, they need to be making decisions for me. And so they need to have the confidence that I will support them whichever way things go. And that's how you start to get an efficient organization.
Like, you have dropped some very interesting high numbers throughout our conversation, but maybe just to put it in a perspective, how big is the team behind all of that? Because you just mentioned how valuable the people are for you and how difficult it is to retrain them or replace them with someone new, and what are your techniques to keep them around? But like, how big of a team do you need to operate such a thing?
So our team is 12, and we think that we have the sizing with that existing team to take us to $1 billion now. My side of the 12 is just 3. Now, the way that you get your team and your company to be efficient is that you hire the expertise to work directly for you, and anything else you try to third party off. So fund administration, loan servicing, certain things that you don't need to be required to be an expert. You don't want to have to manage all that extra headcount. You want to just hire the experts that need to work within your company on your specialized things.
Do you need people with decades of experience on your team? Is that the kind of thing that you need a lot of knowledge and experience to be able to because it's very impressive, right? You say that you only have a team of 12 that should be sufficient to take you to $1 billion. It's an amount of money that I can barely imagine. Even in my head. And when you say that there is 12 people behind it, it's I find it very impressive. And I know that managing funds is something totally different than providing services or selling products or running a SaaS business. At the same time, still, it's 12 people.
So there really is nobody that has 12 decades of experience in this sector. Now, you might have ancillary to the sector, but that we're the first here. And the way that my partners and I think about it, we'd actually prefer to train you. We want you to have some basis of being in the sector, but we'd rather train you and give you best practices than try to untrain the bad practices. And so most of our team was brought on when they were junior level associates and like that, and have worked their way up. And I'm more than proud to say that my key right-hand person for me, I never asked her if she had a degree. I didn't care. She immediately thought of herself as an owner, and this was before we even had vesting going on in ownership. And that's one of the key reasons that we really just started leaning into making sure that we do this as quickly as possible. So, we'd rather have experience over pedigrees, and we'd rather train you ourselves than having to untrain you.
Yeah, you have super deep experience on the financial side, real estate side, combined with cannabis. How does tech play into that? Is that something that you look into, or you leave it to others, like myself, for example, to be digging in tech? Is that of your interest at all?
It's funny you bring that up. So in real estate, there is decades and decades, probably 100 years worth of data points across all asset classes, all markets in the country. Well, and those data sets are necessary to understand the market and to make the best underwriting decisions possible. And those data points are moving in different trends at all times, and the government tracks things. There's third parties that track them. For commercial real estate, there's Reis and CoStar, some of the names. But for cannabis, it was a brand new industry, so none of those data points existed. But we had underwritten over 2,000 transactions, so we had an idea of cannabis transactions. So we had an idea because we had real-time data inputs, but we had no industry norms to weight them off the similar asset class. So, and this asset class is so different than a traditional alternative use of the same real estate that it wasn't applicable. So one of our partners decided that maybe we should start our own data company. And so we did. And so there's a whole separate company that tracks not only all the real estate metrics to the sector. So of this sector, there's a lot of third parties that track the cannabis sales, how the cannabis brands are doing, the taxes that are collected, but that's more on the operator side, the cannabis business side. Nobody's tracking it from the real estate side. So we started tracking it on the real estate side. We mapped all 45,000 license holders in the country. We figured out who they were, what types of licenses they held, who owned them, which turned out to be about 30,000 owners. We mapped every single one of those locations of where those licenses were situated, so we knew where they were. We mapped all of the excise tax. We mapped everything in the whole country. And we started to develop a time series of data to make better decisions for this asset class. Ultimately, we realized that we had such a robust data set that we now start to track the mean averages to what cannabis companies should be doing in any geographic region relative in any specific license type. And now we take that data in our underwriting and we can see when somebody submits a loan to us, are they outperforming or underperforming? Either way, whether they're outperforming or underperforming, we want to establish why, because there's a possibility that their numbers are off, or there's a possibility our numbers are off, and we can continue to update our data sets. Most often they're out of whack, and we bring that into line and we provide value add there. Then we can also take the data that we know from all of this information, and we can tell them, hey, we're not going to run your business, but we're telling you can save 80% in this line item category by doing this. You can save another 20 or 30% in efficiency by doing this. It's up to you, but we're willing to incorporate that into this deal so that you can pick that up because we want you to do better. And that is a massive win for our borrowers, and it makes them stronger and more able to compete. And it's actually giving our borrowers a more competitive advantage relative to other lenders across the country.
Like we've mentioned about these huge sums of money that you have in the fund, and does it ever like stress you that there is a lot of tension and like insane amounts that you have under management?
Well,
do these things happen? Do you take it personally at all?
So I think that first we didn't start off by managing this amount of capital.
Yeah.
We started off decades and decades ago with much smaller amounts of capital. And we've proven to ourselves and to our investors that even in bad circumstances that we've done the right thing, and we know how to navigate through those. And once you've been through multiple real estate cycles and downturns in the economy, and you've done workouts and you've seen how you get to be more comfortable that you can absorb that type of situation and you can build that into your underwriting. And as you get more and more comfortable with the ways that you're de-risking things, you become more comfortable with building an organization that can have that scale to that size. So in reality, you should be thinking it deal by deal. Whether it's a $100,000 deal or a $100 million deal, it should worry you the same. Now, the dollars are much bigger, but it really shouldn't be any different. You should have the same concern of loss of principal on any of those. So you just start adding those deals together. And if you're putting that same discipline into every deal, then you end up with, if you built an organization, if you built processes to manage that and scale that, then you should be in a spot that you feel comfortable to be there. Now, does it weigh on you sometimes? Sure. When there's big macro trends in the entire economy, and waves of things come by, banks are failing, and our investors are all asking us, who do we bank with? And I'm having to explain to them, we've got this, we have this covered. Don't worry, but you got to worry about what's the unknown, and I think that all entrepreneurs should be concerned about that and think about that, regardless of what the size is.
Yeah, I totally agree. And I feel like that there is a certain threshold of the level of stress that one can have, right? And you can't really get past that. And whether you worry about getting a paycheck or not, or whether it's a massive deal with a lot of digits, right? There is only a certain threshold.
Yeah. I think that all the way back to the beginning of our interview, when we're talking about breaking down those decisions down to smaller and smaller pieces, you just try to build those processes, break it down to where you're comfortable with each step, and if you do that, then you should be able to scale it up and continue to scale bigger, as long as you never let that process break down and you continue looking at it and making sure that you're adapting with new market data, and you can't do that without those data points.
Well, and also, as you are, you live a very intense life on the business side, right? You need to find some escape from that, and I know that for you, it's racing cars. Mm-hmm. Is that what resets your mind?
It does. Sometimes it's hard for me to be present in the moment, because I'm, even though I may look like I'm relaxing and watching TV or being with my son, my brain is thinking about other things behind the scenes. And I've forced myself to go once a year I try to do the Valdez trip, but I always do I go to Germany and I drive the Nürburgring in Spa. And, it's something that I force myself to do because it's something I need to do for myself. And when you're driving, I don't race, but I drive on the racetrack. We're moving along pretty good. And when you're moving that fast, you can't focus on anything else but being 100% in the second by second, thousandths of a second per, processing of what you're thinking about. And when I finish that day, and you have to be disciplined, it's a lot of the same things. You can't take chances. You have to start to improve your times. You have to incrementally add what you thought previously might have been risk, but as you start to explore what you previously thought is risk, but you just saw one of your partners go by 10 miles an hour faster than you did, no problem, and you thought you were at the limit of the car. You're like, dang, that I was imposing a limit on myself that doesn't exist there yet. There is one out there. The car's limit is way higher, just my limit, and that's okay. You want to be always within your limits and to get there. But is one of the ways that I reset. I love driving. I go and drive up here in Angeles Crest for fun. And, it's one of my passions.
How is your time for Nürburgring progressing?
I'm down to 729, was the last trip in a 992 GT3 RS, which is okay for that car. You can get down, my goal was to get under 730, so I just barely did. But
you made it.
But some of my colleagues were doing we're doing low 7 minutes, and it's achievable less than 7 minutes and this is with traffic out there we rent the whole track, but we are passing a few people at a time.
Very nice, very nice. Well, I would love to join you for that experience one day. And I think that we should also do the Valdez trip again. I would love to come back to Alaska and do some proper heliskiing again in a safe manner, of course.
Yes.
But it's been a very insightful discussion, Rob. Thank you so much for hopping on the show. You have dropped some incredible numbers. Congratulations on everything that you have done thus far, and wish you the best of luck going forward, of course.
Thanks. Always a pleasure.
Thank you so much for listening or watching to the very end. I hope that means that you really enjoyed it. If you did, please go ahead and follow, subscribe, or review us. It will help us to keep inviting wonderful guests going forward. In the meantime, you can check out some of the other episodes that are out there. And I'll be looking forward to catching you next time.